AMD just printed a massive 6.61% daily candle. Retail thinks the tech trade is back, while critics say AMD ran out of gas. But while chasers stare at daily noise, smart money is plotting the next leg up. AMD wrapped Monday's session at $552.05. It looks violent on a one-day chart. But check your Bloomberg terminal. AMD isn't crashing or mooning. It's locked in a massive high-level macro range consolidation. Forget the stock price. Track the physical supply chain. In early July, AMD notified partners of mandatory price hikes on its Radeon GPU stack. Retail thinks it's a greedy margin grab, but the thesis is deeper. Before we run the numbers, smash like and subscribe. If you want to front-run block trades, track options delta, and spot structural sector rotations before the crowd, hit the description link to join our desk. AMD hasn't explained the hike, but look at the macro puzzle. Samsung is hiking DRAM, Intel is raising CPU pricing, and now AMD is marking up GPUs. The entire semi-stack is entering an inflation loop. Demand is sticky. Retail panics over higher costs, but for the buy side, pricing power is a bullish signal. You can't raise prices into a weak market. This broad semi-markup proves underlying AI infrastructure appetite remains robust. My desk is hyper-focused on AMD's new AI Halo silicon ecosystem. Media benchmarks confirm this. Local workstation chip is taking a direct shot at Nvidia's iron grip on enterprise local large model inference. The benchmarks are clear. The raw hardware is lethal, but the software moat is where AMD lags. Jensen's real moat isn't the GPU, it's CUDA. AMD's ROCm software layer needs time, but it's rapidly closing the delta. AMD holds a hidden trump card: seamless Windows ecosystem integration. Enterprise developers can run local models out of the box without fighting GitHub bugs. For corporations, that eliminates severe overhead. This isn't about beating Nvidia today. AMD is playing the long game. Once next-gen LPDDR6 memory scales alongside mature ROCm code, the secular bull run for the local AI PC and workstation market explodes. Check the sell-side desks. Goldman Sachs just aggressively raised its AMD price target to $640. Street targets stretch to a $700 ceiling with a $537 average, confirming institutions are loading up on this dip. Is the AMD growth story dead? Absolutely not. If it were, they wouldn't have pricing power, Goldman wouldn't hike targets, and new silicon pipelines wouldn't ship. The issue isn't demand, it's software maturity. My tactical takeaway: AI structural demand hasn't evaporated, and AMD's operational fundamentals are clean. Instead, the entire global semiconductor supply chain is pivoting into a powerful new inflation cycle. New enterprise workstations are dropping, and Wall Street is lifting targets. These macro signals matter infinitely more than a random 6% daily print. AMD is a mandatory asset for your tech watch list. To front-run macro semi-data, spot institutional liquidity blocks, and track precise technical chart clusters before the broader retail float, hit the description link right now to join our private community desk. Drop your technical conviction in the comments. Does AMD clear the psychological $600 ceiling first, or do we face more local range-bound chop? Smash that subscribe button, and I'll see you on the next Hey Print.